Hey everyone, welcome to the weekly review. We had our first trend break in a long time, like this has been going on since October, just constant rally. We have a trend break we close below the trend line, like let's say something like this. And this usually precedes a bigger correction coming our way. And I'll take the signs one at a time. First things first is this big counter move trend line, which broke the trend line. We closed below it, big engulfing one. We went from red to green, from green to red, sorry. It was like 2.12%. We haven't had a 2% candle down in a very, very long time. This type of candles usually um, precede a bigger correction, but tops are kind of rounded. They don't necessarily spike up and then reverse, only if it's a short-term top. But in general, they're rounded, and we can see this in the past as well. For first example is this one in December 2022, sorry. We had a 17-80% rally, something like this. But how big was this? 17%. Topped out, went on a small correction, tried to go up again, got rejected, and then we had a bigger correction. And this candle, even on this one, it tried to go up again, like it went up and then got rejected. You can see the top of the wick here, which was I think 50% on the other candle. Let's take a look. Just it was just above 50% on this candle. Okay, next one. Next one didn't bring a larger correction. It was just another follow-up down day, but this is kind of normal. I would have expected this one not to go down that much because it wasn't after a prolonged uptrend. So we just gotten up. It's normal for this one not to cause a bigger pullback. Then we have another one, which again topped out, went down a bit, tried to make new high, failed, and then a bigger correction happened. And this was after 10% rally, 11%. So this one counts as well. Then we have the one at the July top, very similar to today's setup. Basically, big engulfing candle after a rejection, tried to go up a couple of times. I think this was like a zero point 0.2 Fibonacci retracement. 0.78 retracement or 0.23, depending how you look at it. 23, like this. It even went above the 23. Maybe we see the same kind of pattern to this week, but basically, big engulfing candle tried to go up again, and then when it went lower again, it had a corrective move that had impulse. Then we have one that didn't cause a correction. It was like 16%. Uh, what I would say about this one is that it was just a low retest and then it went even higher. We could potentially see this same thing again. I'm doubtful considering how big the rally has been so far. So I'm more confident that we see a bigger one. But I think we see, even if it's just a short correction, we should see something like this, like 510, meaning the low area would be retested and then it goes up. So this would be something similar to this one here that didn't cause a bigger correction. But in general, this type of candles after a huge move up is a indicator that things are going to go downhill very, very soon. And given what's happening with commodities, crypto, the market, and everything else, inflation should be picking back up. There's no way we get the call print, and this will cause the June cut to be off the table, and most likely we will get zero cuts this year unless we get weakness in economic activity and in the jobs market. We just had the jobs data from a couple of days ago and it was super hot. So that's not happening. The market will very soon reprice zero cuts for the year, and that will give us the correction in theory. Some other kind of indicators, we're still in a divergence here, making lower highs for quite a while. Um, my indicator with positioning is, I'll take a screenshot to draw on it. Like this, do snipping tool. So we usually see something like this type of divergence before a big correction. We saw it here as well at the previous top. And what is happening right now? Again, a divergence while price goes higher and higher. And this is a common occurrence, a very often common occurrence in bull markets. So this is another one. We have MACD crossover. MACD has been going, has a bearish crossover. On the weekly, it's curling up for a crossover as well. And this is what happened last time as well. So all kinds of things pointing that towards a bigger correction coming very, very soon. And very likely starting this week. VIX has picked up and has gone higher already. The market hasn't really gone down. It was like a 0.8% week on the weekly. How much was it down? 0.89. So VIX went up a lot. The market didn't go up a lot. Late bulls are coming in, but just the fact that late bulls are coming in is just will provide fuel for when the move down happens. Okay, so that's kind of it for now for this aspect of it. Let's look at what I posted on Friday. And we zoom in. This is what I posted. Thought we would get a retracement. These are Fibonacci levels. This one was 0.68, 0.50, and 0.23. Or I don't know. Let me draw it again. I don't remember exactly. 0.38. We overshot. I didn't think we would go above 0.38, but we did. Maybe we go a bit higher on Monday, Tuesday, and then the rug pull comes. The targets are the same. Timeline is going to be different. The most I think we will see is just a retest of this trend line. When we hit this trend line, it's a slam dunk short, uh, and that's kind of it. And then we go down like this. But other than that, everything, the levels are clean and the levels are should be accurate. First target is this 509 level, basically below 510. Then we have 505. This is going to be the 50 MA on the daily indicator. So 50 MA is 506. This is the first location where we can reasonably assume a bounce. This is the minimum pullback we should see. But again, given that how high the rally went and how long we've been in an uptrend, I think we will see more than this, potentially to the 100 MA. This has some examples in the past as well. Like for example, this similar rally we had in 2020 after not this one, although this one counts as well, but the one from the beginning of June until September, not beginning of June, end of June. 20%, even more actually, I didn't put it right, 20%. And we went to the 100 MA. And it will go a bit higher than this, maybe like 490, which lines up with the other levels as well. So this could see a bounce, could go lower. I don't know. Let's get here and we'll reevaluate. But I question is if we bottom on April OPEX. Because there's still more room to go down. Depends on what happens on the macro side. Maybe some new wars start coming, begin. We know the situation with Iran and Israel. Uh, yeah, oil going crazy. There's lots of reason to actually be bearish right now, but that doesn't mean th- uh, stocks will continue going down. But we could see something like this, a bounce to above 500, then go for another leg down afterwards, and continue until the end of April or something like that. But it's too early to evaluate anything like this. For now, this is my main target in the 490 area. It's going to be between the 50 and 100 MA on the daily. Considering how fast the 100 MA is rising, it could actually meet it around 495. We shall see. It's it's a thing to look for when we get there. Yeah, so that's kind of it. Remember to look at levels, not necessarily at the path I draw, because when I nail the path, it's actually a coincidence. But look for levels. Like I said, we can see this. We go lower. We could do something like this. It's the path doesn't matter that much, although it's a guideline. But the levels are what matters, and the timeline, meaning uh, you have to hit certain targets by certain dates or else you risk a reversal. For now, we could keep hovering like we did at the previous top here. We hovered for 3 days and then went down. It's a similar setup now. Basically, Friday we hovered and recovered. Then Monday, Tuesday, pre-CPI, we tried to go higher and failed. Nobody does anything because they're waiting for CPI, and then CPI comes and the next leg begins, which in theory should be down because CPI expected to be hot. Yeah, that's kind of it. Hope it helps. Have a good one. Bye bye.